Bitcoin is once again retesting the 62 of the RSI on the weekly chart. Historically, every time this level is lost, Bitcoin has seen a large correction. We're going to go ahead and discuss a correction today, the possibility of it, the trigger of it on the higher time frame and the smaller time frame, and of course, our lower targets. Let's go ahead, guys, and jump into the video. Okay guys, welcome back to the channel. Thank you so much for tuning in. I hope you're all having a fantastic day today. We're here to take a look at Bitcoin on the smaller time frame and the higher time frame today, discussing the technical indicators, the structural levels, the trend, and everything in between. We're going to be taking a look at the smaller time frame, discussing our trigger points, the next move for Bitcoin, the breakdown of this rising channel formation that we were developing over the last few days, and of course, what our indicators are suggesting. We'll also take a look at the daily trend, discuss the technicals, discuss the trend, our high time frame zones, our next macro targets, and of course go over not only the 4-year cycle, but of course the RSI breakdown on that weekly chart. We have seen it cross back over 62 on the RSI, and we're discussing why this is significant, what it means, and what we have seen historically every time this level is lost. So we're going to go ahead and get into it, guys. We've got a massive video today. You can go ahead and join us on Telegram if you're interested in more of this content. This, of course, is going to be the second link down below. You get access to charts, updates, analysis, exclusive information, educational posts, news events, and so much more to keep you in the loop of the market. Go ahead and sign up. Second link down below. If you're interested in our VIP channel, you can get access to it. It is going to be the first pinned comment. You'll get access to 2 main channels. You can find all the membership information over here. You'll get access to our VIP channel. We post daily trade setups, exact entries, exact targets, such as that. Not only do we have that, guys, we give you the most detailed and exclusive altcoin analysis, just like our videos, short-term, macro for altcoins, for Bitcoin, for everything you need, including we have our trading group chat over here. I teach you guys how to trade. I teach you everything you need to know. I answer all your questions. I'm in here daily showing you guys how to trade, showing the trades I take, and so much more. We have a help chat, we have a general chat, we have altcoin updates, we have so much more. Go ahead and contact me to join up. Now, before we get into it, smash the like button, hit the comment button, and subscribe to the channel, guys. We focus on the charts, the data, the information. No BS, no emotion, no hype, no shilling, pure raw TA. You can subscribe for that content. We do it every other day. Let's go ahead, guys, and get into Bitcoin. So, starting off with the market data, as usual, we have seen that 24-hour liquidations are down 18%, but still generally high. 127 million is no small number. The liquidations are definitely quite higher. 24-hour volume down 14% at 80 billion. Again, 80 billion, not a small number. We're still quite high. We've still got quite high volume. We've still got high liquidations coming in the last 24 hours. May is in the red, negative 0.8%. Again, we have seen a strong pullback over the last 24 hours, as we expected, and as we talked about in our we talk about it all over YouTube and of course in our Telegram. If you're in our Telegram, you would have seen that coming, guys. If you're in that free channel, which you can go ahead and get access to, you would have seen the whole of yesterday. We were discussing that breakdown was coming over here. You can see we're telling you guys, warning you guys, we still have that bearish trend attack. The market is still bearish. We have weakness. We have exhaustion patterns playing out. Be wary. Anyway, let's go ahead and move on. Liquidations and volatility, 2.23% on the 30. On the 60, we're sitting at 2.92, both slightly climbing up. And again, we do expect these to slightly climb up as the price starts moving more aggressively. For liquidations, we have seen a pretty decent spread between both shorts and longs, but in the last 24 hours, we had majority of longs liquidate as that price crashed down below that rising channel. So not looking very good for the bulls right now. The bears are still in control. Like we said, the bears are in control of this structure until we start closing some highs around 29,600. We'll discuss that in just a moment. DXY is still a support. The markets are closed. We have CPI coming out in 3 days, which can potentially shift the DXY in either direction. So watching CPI, that is going to be a very important trigger point for the DXY. If CPI comes out good, meaning inflation's either plateauing or continuing down, most likely it will be continuing down on year on year, month on month, maybe it's gone up a little bit, year on year has definitely come down. We will see the DXY drop. If DXY drops, that is going to be bullish for stocks. It is going to be bullish for cryptocurrency. But we'll discuss that more as we come closer to it. But there is a few minute details I want to go over, specifically how data is perceived in the financial markets as opposed to perceived from an economic basis, because markets are front running, they're leading, they go based off perceived systematic risk. So sometimes you have data that is perceived to be bullish for the economy, but the markets can still react negatively, as we saw in NFP. Anyway, guys, broader markets here, Dow Jones, S&P 500, you can see where markets are closed right now. We do need to be starting to break above these local neckline resistances. There's a 1 year long resistance for the price to continue upwards. Until then, we have a rising channel. Okay, rising channel is a bearish structure. If we do break down here, we can expect the price to continue downwards, but until that level is broken down, we can invalidate this bearish structure and we can continue upwards. Same goes for Dow Jones over here. We have our uptrending support line right over here. If we lose this uptrending support line, expect the prices to come down. Until then, we do have an uptrend which we could respect and continue upwards if we break through these necklines. Again, CPI is going to be a pretty strong trigger to determine the direction of these markets. Let's go ahead, guys, and get into Bitcoin. And I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you could do so with the link in the description. Thanks for listening. There's so much to talk about today, guys, and I do not even know where to start, but we're going to go ahead and start off on the daily chart, move over to the 4-year cycle, move over to the weekly RSI, and then loop it back around to the smaller time frame. So the daily chart, guys, let's talk about what's going on. As you can see in the chart right here, for the new viewers, our red zones are resistances, our green zones are support. You can see we have a few technical indicators moving through the chart right now. We have our Gaussian channel and our 50 EMA. We're going to go ahead and get rid of those just for a moment. We'll come back to them. As you can see, Bitcoin is currently in a pretty strong resistance. This is a $28,000 to $30,000 resistance range. It is a resistance range that has lasted over a 1 year period. In fact, it's lasted a little bit over 2 years now. It's been present since basically January 2021. And it provided the basis of support for the prior bull run, right? We had massive retest of this point during the bull run, and finally when we broke down, we had a huge correction. So we know this area is a level of huge resistance, and we can confirm that according to the VRPV over here, as we have a massive jump in the VRPV right after we had a gap. That signifies there's a shift in resistance from low resistance to high resistance, and therefore this range between 28 to 30,000 was going to be a challenge. As we said weeks and weeks ago, 28 to 30,000 was going to be our target. In fact, we bought Bitcoin all the way down over here, and we sold at 30,000, guys. We have been in profit ever since. We sold our bags at 30,000. We'll talk about when we'll buy them back in today's video. Anyway, until we break over this level, we are technically not in a macro uptrend. For a macro uptrend to be present, we need to flip the prior structure local low, or the major support of the prior structure, meaning this resistance needs to be flipped for us to flip a macro uptrend. Until then, we are in a daily uptrend, we are in a weekly uptrend, we are in a reversal structure, and we're definitely out of the bear market. We've been out of the bear market ever since here. Like we said, we've been out of the bear market for a long time. However, we have been seeing weakness on the chart for quite some time. We're going to go ahead and bring up these indicators now. As we can see with these indicators, we have the RSI right over here, and we have our market cipher B. These are momentum indicators. Momentum indicators are incredibly efficient at predicting price strength, but more importantly, direction of price, as momentum is one of the leading characteristics of price action. In fact, momentum is comprised of velocity, speed, volatility, and we can even throw some volume in there too, okay? Now, if we look at the strength of price action, or if we wanted to find the strength of a trend, how do we do that? Well, the strength of a trend is a combination of these metrics. So if momentum is the result of these metrics, or the combined result of these metrics, and the strength of price action is the result of these metrics, we can tie momentum and strength together quite strongly. We can say if momentum is going down, the strength is going down. If momentum is going up, the strength is going up. Now, we do have these scenarios where we have discrepancies, meaning momentum is dropping, but price is rising. This is a sign of weakness. It is saying the price is overextending in comparison to the characteristics of the price, and this is nothing more than a little bit of weakness. And again, this is a big warning sign, and it can lead to corrections and, more importantly, rejections in resistance zones. This instance is quite common after we see volatile moves into strong resistances, as data, technical data, equates the prior price action and smooths it out. So when we get a large move upwards followed by strong consolidation, we do generally see these discrepancies between trend strength and, of course, the metrics of price action. So how will we push above 30,000? Because we are definitely in resistance, we are definitely aiming downwards, we are definitely weakening. How would we be able to negate the weakness in this trend and push upwards? We are going to need to see a break over this RSI trigger. We need to see momentum flip positive again. If momentum flips positive, those metrics of price action, which we talked about over here, will then be on the same side of the strength of the trend. They will be working together. They'll be confirming each other rather than contradicting each other, and that is going to give a higher degree of a probability of a break upwards. The next target upwards will, of course, be 32,000. We'll discuss that a little bit more in the 4-year cycle. Until then, we are in an uptrend. So the possibility of that is still there. However, we are weakening. Like we said, momentum's coming down, price action is in resistance. Not only that, we are seeing that we are seeing weakness on the chart in regards to the Gaussian channel and the 50 EMA. But the trend is still up. I want to really knock that in. The uptrend is still intact on the daily chart right now. For the uptrend to be lost, we need to see the price push into the Gaussian channel, break the 50 EMA, and clear this local low right over here. As a consequence that midline will be broken, and we'll talk about that in the short term. If we lose 27,000, that will be the confirmation point where this uptrend we have been in is over, and that could send the price downwards to 24.4 to 25.2. That is a daily. For the weekly trend to turn down, for the weekly trend to turn negative, for the bears to take control on the weekly chart, 24.4k needs to be lost, okay? If 24.4k gets lost, we get pushed back into this major horizontal chop zone. This will be determined as deviation, just as this was deviation, and we're pushing sideways again. Again, there's a high risk environment and is not looking good, more of a neutral territory. So let's talk about 30,000 on the 4-year cycle. Then we'll get into the weekly RSI, show you what it means to drop below 62, and then we'll talk about the short-term price action, our targets, our expectations, and again, the trigger points of moves. Let's go ahead and get stuck into it. So 30,000, why is this significant? Why do we need to break it? What does it mean for a macro trend to start? And of course, how high can we go if we do? So if we look at prior cycles, we can see that similar yearly low of the prior bull run is present for both the 2014 and the 2018 market bull run. We have seen that yearly low act as major support. In fact, we have represented that by our red horizontal line. You can see it. Every single time we break a monthly candle above that level, we actually end up rallying quite quickly, not too long after, to the dotted trend line. The dotted trend line is not a random point. The dotted trend line is, in fact, the local high, or what you'll call the bull trap of the bear run. It is the bull trap of the bear run. It is the first dead cat bounce high of the bear market. We saw it happen over here. Now, every single time we close a monthly candle above that yearly low, we end up going up to that point and then rejecting from it. So we are looking for a break of the monthly candle above 30,000. If that happens, our next target is going to be 48,000. Now we can confirm that on this higher time frame chart. We can see, according to the VRPV, if we break above 30,000, our next target of course is 32, and we're much more likely to continue upwards to 40 to potentially to 48, where that jump up into the RPV is again. Now if we reach 48, we can expect a rejection back to 40 and then a continuation back upwards, as we have seen in prior cycles, but we're watching for that. So 30,000 is a major trigger for a macro continuation. Until that point is broken, we are not in a macro uptrend. We have seen consolidation under before. If we look back at 2016, 2015, we saw consolidation for about 3 months underneath that resistance before we continued upwards. So definitely expecting something along the lines of that if this monthly candle does actually in fact close red underneath that resistance. Another thing is the bull run. When do we expect the bull run to start? If we take a date range trend, we can see our zones. Every single consolidation zone of a temporary area between the bear run, the end of the bear market to the start of the bull market is around 16 to 17 bars. So we take that same date range trend and we apply it to this instance. We can see 16 to 17 bars takes us anywhere between March 2024 to April 2024. Therefore, we expect the bull run to start around about that time. The second point we need to actually achieve is a monthly candle break over the dotted trend line. If we see the monthly candle broke over the dotted trend line, the monthly candle broke over the dotted trend line. When that happens, the speed, velocity, and trend angle of price action massively steepen. Look at the trend angle from that circle to the local top compared to the bottom to that breaking point. The steepness of the trend massively increases, and thus the volatility, volume, liquidity increased in the market that sends the price to a new all-time high. And thirdly, we need to see a monthly close over the baseline, which is this red line. This is the baseline of the Ichimoku cloud indicator. A monthly close over that trend line will of course confirm the bull run has started as well. So a few things. Let's go ahead guys and take a look at this chart. This is really, really interesting. Every single time we have closed a pivot point, okay? The RSI moves in pivots. I'm gonna go quickly explain it. If we take really quickly, let me go ahead and take something like this, for example. It will move in a pivot. There'll be the weekly close. The weekly will open. You'll move around into a closes, and then you'll pivot. The RSI moves in a pivot format. So if we look at this pivot over here, we can see we actually had a breakdown in that pivot about 2 weeks ago, about 2 or 3 weeks ago. And that of course is a bearish sign. I'm going to go ahead and draw this in. Every single time historically we have seen a loss, we'll go back from this date range over here. Every single time we have seen a drop below the 62 in the RSI, we end up continuing down. There's one instance. Okay. Here's another instance. Oh, sorry, that was a retest. Here's another instance over here. Okay. 2, another instance over here. Okay. Pretty strong correction. And another instance right over here. And finally, we'll go one more, another instance over here. You can see every single time, guys, we close a weekly below the RSI point, we actually end up correcting quite aggressively. We've seen multiple, double-digit corrections almost every time from that breakdown point. You can see it right over here. So this is a pretty negative sign for the chart. It represents a high time frame momentum shift. Again, this is a weekly momentum shift. We've seen on the daily chart already how we have noticed that the momentum is already weakening. We have these bearish divergences pop up. This is something to be concerned about. This isn't just random stuff we're looking at. We used the RSI on the weekly chart to predict the exact bottom. We knew to buy at 16,500 because we had a momentum shift right over here. We had that momentum shift. We are now seeing a negative shift in momentum, which could potentially result in an extended correction. Another instance I want to show you how it's actually verified the opposite way. If we change this line to maybe green, just to make it a little more bullish, and we see a crossover. Every time we have seen a break above that level, we have seen an equally as strong continuation upwards. I'm going to show you. Let's cross it over here. Every single time we have seen a break above, we have seen just as strong as a continuation upwards. This is how important these momentum shifts really are for the price action, guys. You can see it right over here. So this isn't just a random thing. This is a shift in momentum that is happening on the weekly. It is not yet confirmed as the weekly candle is not closed, but it is again validating the smaller time frame discrepancies we are seeing. It's telling us, what it's telling us is this small time frame weakness we have been tracking and keeping our eyes on now. Ever since we entered this resistance range, we have been bearish, but the small time frame is now suggesting that this data is translating to a higher time frame, meaning the higher time frame is starting to look weaker and weaker. And if we do start to see these corrections, that could translate to the weekly chart, which is now, and potentially the monthly chart, and result in a monthly candle close below 30,000. If that happens, all it does is it pushes back the timeline another month, and it says, well, we didn't break over $30,000 this month. We have to wait another month, guys. So it slows down the progress for that continuation or that entry point to a macro uptrend. Let's look at the short-term price action, guys. We have seen a bearish breakdown on the rising channel. We have been in this pattern for a couple days. We've said retesting the upper exhaustion pattern, bearish momentum. This is not bullish. Keep your eyes on the chart. We saw a breakdown perfectly as expected. A lot of people got really bullish up here, but we were telling you guys the prices, the charts, everything, it doesn't lie. You have to trust the market. You have to trust the charts, guys. Price structures are nothing more than visual representations of trend strength. Remember, we have price drivers. We have drivers of price action. This is like economic, okay, political, social, okay. We have characteristics of price action: volume, liquidity, volume, momentum, velocity, speed, liquidity, okay. And then we have price strength. All of these determine, again, how the price moves and thus the strength of a price action. When we see this pattern here, we are seeing an exhaustion pattern, as during this pattern we see upward consolidation with, again, decreasing momentum, decreasing volume, decreasing speed, decreasing velocity. All those metrics that are suggesting this uptrends, all these metrics are suggesting that the uptrend is weakening, and therefore the probability of a breakdown is higher. And when we look at these structures, they're just visual representations of the metrics of price action, and it actually suggests, according to market structure theory, that a rising channel has about a 78% breakdown probability. It's not the largest, if not falling wedges, or actually wedges in fact are, but channels, ascending channels have one of the largest breakdown probability across all market structures. So the probability for a breakdown was 10 to none, really. It was a very obvious breakdown, a very obvious bearish pattern, but again, people got bullish before these trigger points really went off. So let's talk about this. We talked about the possibility for a breakdown to 25,000. What would it take? What would it take? First and foremost, this whole area here is neutral. We are in a neutral horizontal consolidation with macro weakness. If I had to define what we're seeing right now in a simple word, it would be a neutral horizontal consolidation on the daily chart with macro weakness. Okay, that is what we're seeing. For us to see a breakdown to 25.2k, for us to see that move downward, we need to have, again, the break over 50 MA, a break over the Gaussian channel midline, and a loss of its local low. The loss of a local low is going to be this point right here, 27,000 to 26,800. You can see when we lose that level, we enter a VRPV gap. Where does the support come into? 25.2 to 24.4. No coincidence, guys. This is a low resistance range, a low volume range, a low liquidity range. What we see in that range here, LRR, we see increased volatility. That means we get a surge of price action. If we break below this resistance, we have bearish momentum. Therefore, if we have bearish momentum, we know that we have bearish velocity, speed, volume, and of course liquidity. That equals weakness in the trend, and very sharp and sudden correction will occur down to that level. Again, this isn't rocket science, guys. The charts tell you exactly what you need to do. It is like reading a language. It's reading a book when you're good at it. Understand what everything tells you. Every single movement, every single wick, every single bit of price action tells you a story. You have to paint the narrative of what is going on and then apply confirmations based on structural and of course technical levels. So right now, we are definitely not out of the woods yet. We definitely still have a chance for the bulls to take and regain control. Like I said already, for that to happen, we need to cross that RSI on the daily. But if we look at the short time frame, we do need to see a break over this trend line. This is a very key trend line. We actually saw a fake out above. We actually didn't close above it. We saw a strong rejection. This is a pretty key trend line we need to break above. As you can see on the chart over here, 4-hour rejection. If we break above this trend line, we will have invertedly continuing. We are going to see a continuation upwards. That will take us to retest this liquidity zone right over here. They're going to see a push into about 30,000 to 30,800 if we get that breakout. But I wouldn't hold your breath for it until it happens. It's something we'll see a mile away. If it does happen, it happens. If it doesn't happen, it doesn't happen. It is what it is, okay? Now, bulls need to reclaim that zone. They need to break above 29,000 to 29,800 to 30,000 to get strength. They need to deviate above this entire area of consolidation and push into this higher range, this lower resistance range. That will facilitate a continuation upwards, and that could be the trigger for a break of that RSI and a continuation into 32,000, guys. I'm going to wrap up the video there. I hope you enjoyed. I hope you learned something. You got any questions, leave them down below. Subscribe to the channel, guys. We do the most comprehensive, technical, beneficial, and of course educational content on YouTube when it comes to technical analysis. I've been trading for a very, very long time, and of course been doing TA for even longer. And I do obviously very much value you guys' input and obviously care about my viewers a lot. So go ahead and subscribe to the channel. Don't miss a video, click that bell notification. You can join us on Telegram for more information. Of course, if you want to learn how to trade, if you want to learn, if you're new to TA, if you're a beginner to trading, if you're a beginner to TA, the Crypto Academy course is going to be for you. It's a 10-unit course. We teach you everything you need to know to basically apply that strong, solid foundation of analysis and TA, guys. Thanks for watching. See you guys tomorrow. Cheers.